how I caught over 60 pips trading gold on Monday. So let me do a quick breakdown on this trade. This is gold 4 hours time frame, but then let me start from the 1 hour time frame, right? Or rather, let me start from 30 minutes time frame. Now this is a simple analysis. Now this is what I was looking at. I'll have to, let me take this off. This is what I was looking at on the 30 minutes time frame, right? So we saw price made an impulse. Price made an impulse to the upside. You can see this impulse. Now before that, let's take a look at what price did here. Price made an impulse from this price point to this price point, and then we had a retracement. You can see this bearish move before the next impulse. Now what happened there is the same thing that happened there as well. So I was basically looking for a repetitive type of move, right? So we had this impulse, price retraced back, and then you can see we created this lower low, right? Or rather higher low. We created this higher low, right? Now the next thing I was expecting price to do is to create a new high or equal highs, right? That is trading back to this high. Either we'll break above to create a new high, or we'll make equal highs and then drop down, right? So that was basically what I was expecting from price to do. So this is just simple technical analysis. Now, how did I catch my entry? Remember, I was expecting price to trade back to this high because we created a lower high here, right? So we had impulse. Remember, I had impulse. We had this correction. Now we created a higher low. I always like to say low high. A higher low. We created a higher low. Now remember, this is an uptrend. We created a higher low. Now I was expecting price to either create equal highs or a new high. Remember, if you have watched my course on market structure, you understand what I'm saying here. So I basically implemented the idea of market structure on this chart, right? Now, so immediately price created this higher low. All I was waiting for price to just break this neckline, because when you take a look at this look like a double bottom. Coming. This looks like a double bottom. It's a double bottom. So immediately price created this double bottom. All I was waiting for is for price to break above this neckline, and then I take in my trade, right? Now, it's a very, very simple setup, like very, very easy setup. Now, immediately price broke above the neckline of the double bottom. You can see this 30 minutes candlestick closing above the structure here. I hopped in for my buy trade, just putting my stop loss just below the 30 minutes candlestick. And when you take a look at this stop is about 27 pips, a very tight stop. I had my stop just around there. Let me see, just around there. Yeah, 27 pips exactly. Very tight stop. And then I had my TP1. I actually gave out 2 TPs on this trade. The reason for my first TP is because of this weak rejection here. You can see this weak rejection. I don't joke with weak rejection on the chart. So you can see this weak rejection. So this was my first take profit. Now this take profit was around let's say 40 pips. Let's say 40 pips, because it was just above like this. So you have 40 pips, and then my second take profit was around 70 pips, right? Now, but when you take a look at this, we actually held this trade over the night. I told my community to hold the trade over the night. Now, when you take a look at this, you can see how price traded up. We actually did smash take profit 1, of which I took all my profit at take profit 1, because for me, I only gave out that TP2 because of people that would like to hold for long. But me, I'm very cool with 40, 50 pips like that, right? because of the type of lot size I use. Now, immediately price smashed TP1. We saw price decline a little bit. Price decline a little bit, and then we actually did pushed up, but we didn't actually smash take profit. So when you take a look at this closely, you can see this is just few pips to TP2, just few pips. You can see just few pips. Let me even see how many pips. just 4 pips to TP2, and then price reversed. Right, there's a rule I give when it comes to TP1 and TP2, and I think you should also implement it when you're following a signal provider, because a lot of signal providers, they give even TP5. You understand? So it's smart for you to use those TP wisely. Now, for me, what I like to do is I like to open 2 positions when the trade comes with TP2. I like to open 2 positions, put 1 position on TP1, put 1 position on TP2. Now, if immediately TP1 gets smashed, then the second position, I'll now have to break even that position. That's what I do, and I expect you all to do same. When it's TP1, you put your TP at TP1. When it's TP1 and TP2, you don't just put only TP2 and then leave it like that, because the market can just do anything at any time. You can take a look at this trade. We moved, but just 4 pips close to TP2. Now, if you only had TP2 on your trade, then you definitely must have either closed at break even or probably even closed in loss. So imagine you losing all these pips. This is 64 pips, crazy amount of pips on gold, So you need to know how to manage your trade properly. Very, very important. Yeah, so I think that's all for now. I'll drop my next breakdown. Whenever I take a trade, I'll do a breakdown like this and then post it here. So I want you all to like, share, subscribe, leave a comment, and if you made money from this trade, leave a comment, guys. Yeah, bye.